Will I need to use collateral to secure my business loan? The short answer is yes. Many times you're going to have a percentage of the loan in collateral. So what does that mean? If you borrow $500,000 and you need a 20% coverage, or you need collateral for 20% of the loan, you're going to have real assets somewhere worth $100,000. Every bank treats this answer a little bit differently. Some banks, even though they lend off of cash flow for businesses, so what they do is they say, okay, can the business pay back this loan in the amount of time that we're going to give them? And we're going to give them 5 years or 7 years or some amount of time that this business will have to repay this loan. And so the cash is really the asset that they're using to secure their loan. But many times, one of the criteria will be how much equity is in the business. And the equity, of course, is the kind of the inherent value. And so the bank isn't going to just ask for you to make your payments every month on your business loan. They're going to ask for some security. They're going to say, we'd like a guarantee, we'd like a general security agreement, we want an assignment of proceeds. Oh, and by the way, the business owners, we'd like to maybe put a mortgage on their house, or maybe we would like them to pledge some additional security if we're not comfortable that the business is going to be able, or that we're concerned maybe that the business may not be able to repay the loan. So are you going to need collateral to secure your business loan? Many times the answer is yes. And one of the things that you can negotiate with the bank when you're talking to them about getting a loan is the extent to which the collateral is required. So if you're going to borrow $500,000, you may not need $500,000 worth of collateral. If you're going to borrow $500,000, maybe you only need $100,000 or $50,000 or $250,000 worth of collateral. But that's something that you can negotiate. The bank will ask for it, but it's something that you'll be able to talk to them about and interact with them. I'll just make a little note here about something called non-recourse financing, because I've mentioned the term personal guarantee. Many business owners fret about that, and they say, oh, I don't want to provide my personal guarantee. I mean, I've run this business for 10 or 20 or however many years, and I think it can stand on its own 2 feet, and so I don't want to guarantee the loan. That's referred to as non-recourse financing, where the bank or lender will have no recourse against you as the business owner. And many banks don't get very excited about that. Non-recourse financing is available, but it's very, very difficult to get, especially since the financial meltdown of a few years ago. You're going to have to provide a personal guarantee to some level. So again, if you were borrowing $500,000 and the bank says, look, we want a 50% personal guarantee, that would mean they want you to personally guarantee $250,000, so that in the event that the business is not able to pay the loan, that they can come after you for $250,000 worth of that loan.